For nearly a century, one currency has reigned supreme over the global financial system. The United States dollar, a symbol of economic might and stability, became the world's reserve currency after the Second World War. From Tokyo to Berlin, London to São Paulo, its influence has been woven into the very fabric of international trade and finance. For decades, holding dollars was seen as the safest bet, the ultimate store of value in a turbulent world. This unparalleled status has granted the United States immense economic and political leverage, allowing it to finance its deficits and project power across the globe. The greenback's shadow has loomed large, shaping markets, dictating commodity prices, and serving as the benchmark against which all other currencies were measured. However, the foundations of this long-standing dominance are beginning to show cracks. The core of the issue lies within the United States itself. A mountain of national debt, soaring to unprecedented levels, has started to spook international investors and central banks. Visualized as a relentless, upward-climbing graph, this debt represents a promise to pay that some fear may become unsustainable. Compounding this is the specter of inflation, a force that erodes the purchasing power of every dollar held in reserve. Rising prices for everyday goods, depicted through symbolic imagery of shrinking grocery bags and escalating gas pump numbers, serve as a stark reminder that the dollar's value is not immutable. These domestic pressures are sending ripples across the international community, prompting a critical reevaluation of the risks associated with holding dollar-denominated assets. In response to these concerns, the global landscape is undergoing a significant transformation. Nations are actively seeking to diversify their holdings and reduce their dependence on a single currency. We see the rise of credible alternatives gaining traction on the world stage. The euro, representing the economic bloc of the European Union, has solidified its position as a major contender. More recently, the Chinese yuan, backed by the world's second-largest economy, is being increasingly used in bilateral trade, particularly among emerging markets. This trend, often termed de-dollarization, is not a coordinated conspiracy, but a pragmatic shift. Countries like Brazil, Russia, India, China, and South Africa, the BRICS nations, are exploring new frameworks for trade and finance that bypass the dollar entirely, signaling a collective desire for a more multipolar financial system. This brings us to a pivotal and thought-provoking question about the road ahead. As the tectonic plates of the global economy shift, what does the future hold for the international financial order? The era of unquestioned American monetary dominance may be drawing to a close, not with a sudden collapse, but through a gradual and steady erosion. We are left contemplating a new world, one where a basket of currencies, the dollar, the euro, the yuan, and perhaps others yet to emerge, compete for influence. Will this lead to a more balanced and resilient global system, or will it usher in an era of financial fragmentation and instability? The future of the dollar is more than just an economic question. It is a question about the future of global power itself.